Good morning. So let's go ahead and review what's happened so far. Yesterday's gap up is shown here on the chart. This huge hole in the chart telling me that I should no longer expect another leg down in the market. Not just this gap, but the fact that this highest peak in the falling wedge retraced 50% of the prior wave A. If another down leg were to be in the books or in store, another down leg in store, I think the next high would have stopped right at the 61.8% retracement, right around 39.36. But it blew through 39.36 as if it didn't exist. All right. So yesterday's rally blew through the 39.36 level, which is the 61.8% retracement of what I thought, or what I don't know. Of course, it was wave A of Z. All right, it blew through it. That was wave A of Z, starting here, ending down here, and then we got wave B of Z. And what we really got was one of the lamest ending to this correction. It ended at last Thursday's low in the futures. Okay, now I really thought, I was 100% convinced almost, that everything to the right of this point right here was part of an ongoing consolidation ahead of this final wave C of Z. The highest peak again retraced exactly 50% of wave A of Z, and I thought that this consolidation will definitely come to a conclusion at the 61.8% retracement, right about here somewhere. But no, it just cut through it like a hot knife through butter. And then I said, it's just, as I said before, a price is free to do whatever the heck it wants. It does not need to ask permission. So then yesterday I looked at it and I found out that maybe what's happening here is we have an impulse unfolding based or according to the Ian Copsey's model for Elliott wave, harmonic Elliott wave, meaning wave 1 is subdividing into an ABC, wave 1. Wave 3 is subdividing into an ABC, and it reached equality yesterday, by the way. ABC reached equality right at the edge of this open gap. Today the futures are a little up, a little higher than yesterday's. I don't know by how much. What did we close at yesterday, guys? Let me see. We closed right around 39.45. I think we closed that around right at that edge of the gap, I think. Right at the edge of the gap, about 39.49 or so is where we closed. And so we're just up a couple of points this morning. When I measured the size of wave 1, multiplied it by 3.618 to 3.764, I got this green area right here. And if this is really wave 3 and it's about to give way to a wave 4, we might stop right here and for the next day pull back in wave 4. In other words, profit taking in wave 4 down to, I don't know, maybe 20 points or so. Or if wave 3 is going to continue on higher, then wave 4 would come at a later time. There's nothing right now suggesting that it's going to stop. Okay. I'm now convinced that this correction is over. I missed the bottom, even though I was trying to time it to perfection. What I thought would be just a counter trend move up to 39.36, 39.38, and I've been waiting for it to get there so I can short. I did not participate in the counter trend rally. Here's what's playing out now that I'm looking at it. There is a shark pattern, 0xabc. It's got two PRZs, the lower of which is PRZ1, ranging from 39.70 to 39.81, but that's not the one I'm interested in, even though this might mark the end of this current wave 3 before giving way to a profit-taking wave 4. All right, it's possible. I think eventually this shark would continue on higher, break above 4,000 on its way to this very, very, very tight PRZ. I mean, we're talking about a 1-point PRZ. The 2.236 AB extension clusters very tightly with the 1.13 extension of the 0x leg. Now, the interesting thing is that we know already that this yellow channel has been playing a role in terms of posing as resistance. Remember this yellow channel that I drew on the weekly chart, right? I connected waves 2 and 4. I drew a line, in other words, across the endpoints of waves 2 and 4. And then I drew a parallel line to it across the endpoint of black wave 3. And what happened back in July, we ran into it, giving way to the recent pullback, which almost tested or back tested the red line. What is the red line? That's the troublesome trend line. That's what I call the troublesome trend line, which is drawn across the April 2010 high and the February 2011 high. Okay, we sort of back tested it. I thought that if wave CFZ would come down, breach it temporarily, and then continue on higher, it would be the ideal scenario. But no, that wave CFZ never really unfolded as an impulse, anything like an impulse, never. Which is absolutely contrary to what the Elliott wave theory would suggest. So for it to end overnight in the futures is one of the lamest and most disappointing, actually, scenarios. So anyways, look, I placed the end of blue wave 4 right here. I'm assuming that blue wave 4 has ended. And then I calculated the target for blue wave 5, the 61.8 to 76.4 projection, meaning I took the distance from the start of wave 1 to the end of wave 3. I multiplied it by 61.8 and by 76.4% and projected that result from the endpoint of wave 4 to get the blue zone. Same thing with the larger trend, the black wave 5. Took the total distance from the starting point of wave 1 to the end point of wave 3, multiplied it twice, once by 61.8%, the other one by 76.4%, and projected the result from the end of wave 4 on up. And what do I get? This gray area. Now, if you want everything to end together harmonically, look for the intersection or the overlap of these two areas, and I get an overlap ranging from 4206 or 4214 actually to 42.90. That's the overlap. Now they share a common boundary down here, which is 42.06, 42.14 almost. Okay. This doesn't mean it won't go a little higher, of course. Anyways, now here's the thing. This crab right here, it's got a 4016, 4017 PRZ. That's the ideal PRZ in my opinion. So what happens if we get to 4017 by end of month? We'll probably run back into this yellow channel. We'll run into the yellow channel. If we do run into the yellow channel, what are we going to do? We're going to pull back, because once the shark PRZ is reached, a reversal is expected. Well, if it's reached in conjunction with this yellow channel, the top of the yellow channel, we're going to run into resistance, pull back, attack again, pull back, attack again, until we finally get to the wave 5 target. That's what I'm thinking is going to happen. So anyone telling you we're going to reverse from here, forget all that. It's not going to reverse. It's done. There's no reason for the market to continue on higher. Earnings are good. Economic data is good. What's the point in correcting? We're just, it's drama. Every time we approach a 100-point milestone in the S&P 500, whether it be 17, 18, 1900, and now 2000, every time we approach the end of a 100-point run, drama ensues. We pull back a little bit, test the lower end of that 100-point run, and then we resume higher. So we're going to take out 2000 very soon. On the S&P, here's what's unfolded. Just a simple zigzag. Wave A, Wave B, and Wave C. That's all that's happened so far. And so far, the move has been pretty impulsive, purposeful in its desire to move higher. It's an elevator shaft, like a type of move. Okay, this is an elevator shaft. It's an impulsive move. Now I could count this as wave 1, 2, 1, 2, 3, 4, 5 for wave 3. This flag is wave 4, and now wave 5 is underway. There's this wedge. It's got a target of, if I calculate the measured move of this falling wedge, I get to about 1955 or so. So if we run into this line right here, this descending line, this might end this 5-wave run, calling for a pullback before resumption higher. Same thing with the Nasdaq, by the way, this chart. The green line is the total height of the wedge, and I projected it from the break point, the price above which the wedge confirmed the breakout, right here upon breaking out, or breaking above the upper trend line of the wedge. So I projected it up, and what do I get? About 39.55, 39.56, something like that. So we came awful close yesterday to this target. We might get to it today and continue on higher. But I really don't know what's going to happen next. I am inclined to, in other words, I really don't know what's going to happen in the very, very, very immediate future. Are we going to pull back in profit-taking mode here before resuming higher? Or are we going to resume higher to fill the gap and then pull back from maybe the 88.6% retracement level? So I'm inclined to just wait for a little pullback, or buy a small position today in September calls, and then wait for a pullback to add to it. But I feel that by the end of August, we will be above 4,000. okay, by the end of August. If you look at volatility, just look at the VIX from a technical analysis standpoint. All right, nothing more than that. Let's look at the VIX. By the way, 39.55 is a nice ending for this Nasdaq run because it would constitute a retest of the 78.6% retracement of the 2000-2002 crash. That's 39.55. This could play a role in just impeding the progress of this current move, setting the stage for a profit-taking pullback and then resumption higher. Now I said let's look at the VXX, right? VXX Daily Chart. This happens all the time, and you hit a particular moving average or you fill a gap, you hit a prior high, and what happens? The correction ends. And that's exactly what happened last week. We reached the 100-day moving average, we bumped into it twice, and then we retreated, and it's been nothing but pullback, nothing but red for the VXX since having reached that 100 DMA. Once it reached that 100 DMA, there was nothing left to do except just bleed. So now today it is at the 50 DMA, all right? And that's why I think it is time for a little bit of a rest, a little bit of a pause, giving back some of the losses, all right? Or if it decides to, if it breaks down, if it breaks below the 50, it's going to fill this gap, and then it will bounce back as the market succumbs to some profit taking. That's a possibility. Though the only thing that bothers me is the Russell. And it bothers me for one reason, because when we started all this, we traced out a 5-wave decline. It was easily identifiable: 1, 2, 3, 4, and 5. And then we had a little bit of a counter trend rally that retraced, if I recall, 38.2% of this 5-wave move down. See this? This bounce actually didn't even get to 38.2%. It was such a weak bounce. It was such a weak bounce. So then what happened after this weak bounce is we moved in a non-impulsive, we moved down in a non-impulsive fashion. Okay? We traced out what looks like a 3-wave here, counter trend rally, and then here, let me draw it that way. 3-wave, counter trend rally, 3-wave, counter trend rally, and I was expecting, to be honest with you, another 3-wave down to complete this correction, making the final leg down an ending diagonal. This never played out unless, when was last Thursday? This is Wednesday, Tuesday, Monday. Last Thursday was here. So the only thing I could think of is that this final leg down was the flush out that completed maybe the ending diagonal. All right. Now, if you measure this 5-wave, if you project the height or the size of this 5-wave, you project it from the top of this very tepid counter trend rally that topped on July 14th, you'll find out that the August 1st low achieved an AB equals CD, meaning that the decline following the tepid rally, the bounce on 7/14th, equaled in size exactly the size of this 5-wave decline. So again, I couldn't make sense out of that because structurally it doesn't look anything like an impulse. Same thing with wave C of Z in the Nasdaq. It doesn't look anything like an impulse because every impulse should be followed by another impulse, and that's not the case here. So maybe there are structures that Elliott wave is not aware of. Now, when I looked at it, when I looked at the IWM, all right, let's look at the IWM for a second. If I take this segment here and I project it down, I notice that the 717 moved down, retraced or extended or reached the 1.618 extension of this prior counter trend move. Exceeded it slightly, but prices below the 1.618 were rejected. And then I tried the same thing with this leg right here. I calculated the extensions for this leg, found out it reached 1.618 as well, and anything below that was rejected. So I decided, you know what, there is here what would be a 3 drives. 1, 2, 3, 4, and 5. It's a 3 drives pattern. That's the only thing that I can explain this ending. That's the only explanation I can come up with for this, sudden ending to this correction. A 3 drives pattern. What does that mean? That means if it's over, we're going back up to 116.50 in the near future. Now, we had a bullish price flip on August 6th. The IWM now is on its bar number 6. Yesterday it completed bar number 6, and today all it needs to do is close above the closing price of August 8th to qualify as bar number 7. Tomorrow it needs to close above bar number 4. Tomorrow's close should be above the closing price of bar number 4, I think, right? 1, 2, 3, 4, that's correct, which is about 113.30, 113.35, to continue on the streak of uninterrupted TD sell setup, or that TD sell setup of 9 consecutive bars, where each bar's close is higher than the close 4 bars ago. To keep that going, we must close tomorrow above 113.34. Today there is room on the downside if it wants to correct a bit. As long as it closes above 112.27, it's okay. But look, the Nasdaq actually is the strongest, because yesterday's bar, this huge green bar, counted as bar number 3, and TDST resistance is right here within striking distance, 39.88. Another 38 points away. So if we reach it before completing the 9-bar setup, it portends strength. Why? Because that TD setup, the ongoing series, if it gets to TDST resistance and breaks above it while still not complete, it means that 9-bar setup is probably going to evolve into a TD sequential or TD combo or something like that. So that's pretty good. But yesterday, despite the strength in the Nasdaq 100, the Russell failed to make a new high relative to last Monday's high. So that was last Monday. The Nasdaq rallied like crazy. The Russell did rally, but never came close to threatening the Monday's high. That's something to keep an eye on. What else? I think. Let's see what else I want to look at. Hold on. Some relative strength ratios. Let's compare the performance of the Russell to the Nasdaq 100. You can see in the last couple of sessions, the Russell did underperform the Nasdaq 100. So this tells you that to take full advantage of this rally, you should be in the Nasdaq 100, not the Russell. Now, let's compare the Russell to the S&P 500. Okay, kind of the same thing. Underperformance in the last couple of sessions. Russell compared to the S&P. Again, being in the Nasdaq is the way to maximize your return, or to take full advantage of this rally. Let's look at QQQ versus SPY. QQQ versus SPY. Look at this. QQQ is blowing SPY out of the water. You can see from the relative strength ratio. QQQ is outperforming SPY by leaps and bounds. Again, you've got to be in the QQQ and not the SPY to take full advantage. SOX versus SPX. Now this thing it started, let's see, last Monday it had an outperformance day. Tuesday was an underperformance day, and yesterday was an outperformance day. But anyways, it's not by much. It's just a little bit of a consolidation here, okay, on the heels of this 13. I expect the SOX not to outperform the S&P 500 by much in the next weeks and months. Maybe this high is going to stand. This high right here in the relative strength ratio is going to stand. In fact, I believe that the SOX has topped for now, and that it's going to make a lower high in the coming months. Let's look at the bank index. The bank index having retested the PRZ right here, printed a 9. It's been moving up, but not commensurately with the Nasdaq. All right, actually, this banking index has been weak. Weakness in the banks is because of low interest rates. Banks can't make money in a low interest rate environment. So I would say that bank is really not confirming the strength, but it might begin to move higher again on the heels of this 7-wave decline. And you know what I think about those 7-wave momentum patterns? They do mark the end of a corrective phase 99% of the time. And that's exactly what we had on the S&P, except that I didn't believe it was all over. Let's look at the XLU over SPY. This remains in a downtrend. Okay, very tight. You know, no particular edge to either one in the last 3 sessions or so. Certainly, the XLU is not winning. There is definitely a downward bias. XLU over SPY. So the XLU utilities are underperforming the large caps in general. And that's good for risk taking. Junk over TLT, corporate bonds, risky bonds. Yesterday, actually, TLT outperformed junk bonds. We broke back out of this channel, but look, the overall picture still is bearish. It's a little bit little disconcerting here. I mean, we're almost back to the highs, yet people continue to seek the safety of treasuries as opposed to taking risk by buying junk bonds or corporate bonds, risky bonds. TLT. Do I have a chart of the TLT? Here it is. TLT again, still near the highs. Still near the highs. It's not budging. And what else? I think that's about it. Weekly charts. The transport bounced off the 20-week moving average, the basis of the Bollinger Band. Bounced off of that. So let's see if it's going to make a new high. We know the Dow bounced off what? Where's the chart of the Dow? Let's see if I have it. I know I have it. So the Dow right here bounced off of the 2007 trend line. Broke above it months ago, came down, tested it this month, bounced off of it. Again, this reminds me of the prior pullbacks in the last several months. The Russell is very similar to the Dow Jones. Didn't quite reach that line this time around. 2007 line. It reached it in mid-May. Not this time. Not this time. It retraced about 78.6% of the rally from mid-May to early July. We retraced about 78.6%. And that's about it. I think maybe we are in the final phase of this bull run, after which a major correction is going to get underway. There's still a little more room to run. And during this run, we're going to form some bearish divergences that are going to precipitate that correction I'm talking about. Before I wrap it up, let's take a quick look at the Nasdaq Futures. What have they done overnight? All right, so overnight, what did we do? We reached 39.5625, and now we're back to yesterday's low, yesterday's high somewhere. In other words, we gave back everything gained during the overnight session. Let's look at the market profile chart. The market profile chart, again, we closed yesterday. Yesterday's close was right here. I'm sorry. We closed right at 39.47.50. And overnight we made new highs, printed a selling tail, it appears here, and the bulk of this auction, the distribution, the bell-shaped curve, is in the vicinity of yesterday's high volume area right here. So yesterday's close was 39.47. We're hovering right above it right here, right in its vicinity. Okay. So our price is being refused here today. We'll find out. Are we going to pull back? We'll find out. I don't have a crystal ball to tell you what's going to come next. The trend, of course, is up on all time frames right now. On all time frames. All right, this wraps it up. We shall decide on what to do next. We certainly don't want to be short, though, from a swing trade perspective. In other words, whatever short I had, August 22nd put spreads, I'm going to have to close sometime today or tomorrow, depending. If we get a pullback today, I'll probably close them. Otherwise, if it doesn't look like we're going to have one, I'm just going to close them anyways. All right, we'll see you at 9:30.